Hello and welcome to the WebRDD trading channel. In the last week, it was another bullish week. Okay, we were getting good profit last week because our setups are working perfectly. We are publishing each and every morning a daily forecast. In that daily forecast, we create and draw buying and selling zones, and the price reacted to those areas perfectly. You can compare and check my earlier videos on my YouTube channel and see what happened in the market last week. Okay, in the weekly chart, you can see there are 8 or 9 consecutive weeks that were bullish. That means there is a big imbalance in the market. You can see there's a big imbalance between the 20 EMA and the current price. So there could be some pullback. We were seeing that in the last couple of days, especially on Thursday. So I will check it later in this video. First of all, I would like to show you how bullish the market is. You can see there are a lot of imbalances and a lot of fair value gaps, but still the price is in a big rally. And even in the last Thursday, it was a bearish day. But you can see last week's candle is a good bullish candle, and we can expect another bullish candle according to this type of candle. Okay. Anyway, if you see the last week's candles, you can see that the last time we saw some pullback and consolidation, similar candles were created at that time before that consolidation. Therefore, we need to see this kind of wick. We need to see this kind of wick before seeing some consolidation. Also, sometimes this kind of pullback occurs even after a good bullish week. So according to my EMA and price action analysis, I'm expecting some pullback. I mentioned in last Sunday's weekly forecast that there could be some pullback during the end of the past week. As I mentioned, after the end of Wednesday, there was a big, and then a lot of people were thinking that gold is in a big rally and could going further up and could be going further up and break above. Yes, gold is hitting the 4,000 level, but it did not go further because, as I mentioned in my last Sunday weekly forecast, it needs some pullback to go further up above the 4,000. As I mentioned, the price was moving backward. You can check this in the 4-hour chart. You can see it clearly. I mentioned there's a big gap between the 4-hour chart, 20 EMA, and the price, and it needs to balance that imbalance because the last 20 candles average and the current price have a big gap. When that happens, the market needs to balance it. That balance occurred with those big bearish candles during the Thursday New York session. Okay, but at that time, I thought the price could touch the 20 exponential moving average and go above. If the price ended below the 20 EMA, then the price could come to the 50 EMA and collect some liquidity below that EMA before going further up. But that did not happen. Therefore, we have to be a little bit aware and a little bit cautious early next week, especially tomorrow, because the price could come down again as there is some liquidity below that area, and price normally hits these kinds of variable lines, okay, because these are not static lines. Therefore, price could come down there. Anyway, you can see in our earlier chart, every time the price came to 20 EMA in the 4-hour chart, it hit and collected some liquidity below before going into a rally again. The only time that happened differently was around September 19th. At that time, the price did not just collect and like create these kinds of wicks. That time, the price ended below the 20 EMA, and due to that, the price came to 50 EMA and collected liquidity below that dynamic line. Okay. After that, the price went up. That's why last week I thought the same thing, but it did not happen because the price came down and ended below the 20 EMA. At that time, I thought after hitting below 20 EMA, the 20 EMA would act as resistance. So I thought the price could come down there, then pull back and go further up, but that did not happen. Therefore, next week, on Monday morning, we have to be careful when entering as a buyer. This is a market where you should only enter as a buyer. Do not enter as a seller. This is a big rally. Therefore, don't do any selling in this market. Next week, our trading plan should be starting with the 20 EMA or 50 EMA. The best setup for me is if the price comes down there and collects liquidity, then we can enter the market with confidence because we have liquidity grabbing and a good pullback to go further up. If not, then at least the price should come down to the 20 EMA on the 1 hour chart. In the 4 hour chart, you should see a candle that collects some liquidity below the 20 EMA. These are the two things we should first look for on Monday morning or during the whole day on Monday before entering the market. Otherwise, don't enter the market. Also, we will discuss this tomorrow morning in my daily forecast, where I will provide you the best buying and selling zones that will be in that video. For now, next week, we can expect some pullback and consolidation in the first couple of days, according to my analysis. After that, I think we can see another big rally and the price could go further up to the 4,000 mark. Otherwise, if the price goes further down to the 50 EMA on the 4 hour chart, then we can expect the price could go further down around 38.26 or 50. The price could meet that area. There's a big gap there, and if the price does that, we can see some big movements as a bearish move. These are the things we can expect next week. I hope you will get some ideas from this video about next week, and we will check our latest gold daily update tomorrow morning in the forecast. Until then, be safe, and please subscribe and like my videos. If you need to know anything further, please leave a comment. Thank you very much.